Yes, still no one have joined. So yes, guys, hi. I guess my audio and video are clear. So today is the first revision class that we are going to start with respect to CA Inter audit for the upcoming May 26 examinations. So I have already shared with you people the complete revision schedule, all our live classes, which I'll be coming live on my YouTube channel. So this is the schedule. If at all you are unaware of this schedule, you can once have a look at this schedule. So today, of course, we'll be starting with the revision of first chapter. So with the first chapter, we'll be starting. See, yes, the name of this series is revision lectures, but believe me, I'll be giving you 100% conceptual clarity. You will not at all feel that these are revision lectures. Okay, so and my target for you people to achieve in the upcoming May 26 examinations, already I told you, every one of you, each one of you has to aim for 60 plus exemption should be our target. And these revision lectures also I'll be taking forward in that particular manner only, wherein a complete conceptual clarity from the examination point of view will be discussing. So the people who have joined, once confirm whether my audio and video are clear. Please confirm whether my audio video clear. Once it is clear, we'll start. So basically the complete revision classes will be taking up through these particular charts. Yes, clear, done. And if you get any doubt while class, you please let me know in the comment section. I'll be looking at the comments once in every 1 hour. Okay, while I am discussing the class, I'll not be frequently looking at the comment section. Whenever you get the doubt, then and there itself you please put it in the comment. All the doubts together I will solve at once. Okay, is that clear? Yes sir. So let us start with our revision of first chapter. So what is the name of first chapter? Nature, objective and scope of audit, right? Let's start with the basics, since this is the first chapter. And the weightage of this first chapter for your examination is 5 marks. Roughly 5 marks you will be getting. And one more thing before starting the revision, I just wanted to tell you the flow of chapters in my chart book. The flow in which we will be discussing is, in this particular flow we will be discussing, but in your ICI study material the flow will be different. We will not be following the flow of ICI study material, because if you follow that particular flow, it will not be easy for you people to understand the standards, because the standards, they are linked to each other, so we have to discuss them in a flow. So I have rearranged the chapters in a proper flow, so we will be following this particular flow. Okay, yes. So if that is clear, let us start with basic concepts. Firstly, audit means, you might be knowing it. Audit is nothing but verification of financial statements. Yes. And where did this term audit has arrived from? The origin of the term audit, where did it arrive from? Basically a Latin word by name audire. Audire means to hear. From that word audire, the term audit has been taken up. Now, why the term audire has been used to derive audit. Basically, in olden days, what it used to happen was auditors, they used to listen to the accounts that are read by the accountants. So listening means audit, and from that term audit has been derived. Okay, and the first reference to the term audit can be found in the book that is written by Kautilya by name Arthashastra. So in that Arthashastra, you will find the reference to the term audit for the first time that has been used. So Kautilya's Arthashastra, audit means to hear. From that, the term audit has been derived. And first Auditor General of India has been appointed in 1860. Sir, what is this Auditor General? Basically, in the current days, Comptroller and Auditor General of India is there, na? C and AG. This C and AG has been derived from Auditor General. About C and AG, we will be discussing in audit of different types of entities. There, in the audit of government, we will be seeing about C and AG. C and AG is the authority that has been established to take care of audit of all the government organizations, right? So for the first time, this Auditor General of India was appointed in India during British time, that is in 1860. And of course, in India, audit has to be done by chartered accountants, right? And to regulate this profession of chartered accountants, a separate authority body by name ICAI, Institute of Chartered Accountants of India, has been established. The purpose of this ICAI is to regulate the profession of chartered accountants, right? So this is basic intro about audit that you will find even in your book also. Same thing you will find. Now, sir, we have discussed audit means verification of financial statements. Yes, in a layman language, you can say that audit means verification of financial statements. But in the examination, you cannot write audit means verification of financial statements. There should be certain technical definition that you have to write. So, what is the technical definition of audit? We'll be seeing the definition of audit and we'll be understanding it. Okay, first of all, audit means an independent examination of financial statements. You need to observe, it is not just examination, it is independent examination. This term independence is very much important for the purpose of audit, because if auditor is not independent of the entity, there is no use of doing the audit. Understanding? And the term audit, the term independence is so important that even your audit report, the output of entire audit, that is audit report, in the audit report, what will be the heading? Will it be written as just audit report? No, you will find the heading of audit report as independent auditor's report. So the term independence is so important that even the audit report is starting with this term independence. Understanding? So independence plays a crucial role in the audit. Sir, okay, sir, you are saying independence will play a crucial role in the audit. What is meant by independence? See, independence means the general meaning only, not being dependent on others. Simple. So whatever the decisions you take during the audit, auditor takes various decisions. Now all those decisions, they should be taken independently. You should not take biased decisions. Understanding? So independence means judgment not subordinate to will or wish of others. That others can be anyone, management, third parties, debtors, creditors. So anyone, everyone comes under others. So whatever the decisions as a auditor you take during the audit, they should be completely based on your own thinking and knowledge. You should not take decisions in a biased manner. Understanding? Yes. So management is telling you to do particular thing, you should not do. Understanding? Just because the reason that management is influencing you, you should not take a decision or you should not do a particular action. Getting it? You should not get influenced by the other party. That is known as independence. So audit is an independent examination of financial statements, and whether profit oriented or not. So the meaning of the term audit does not change irrespective of whether entity is a profit oriented or a non-profit oriented. So even if charitable organization, also if auditor is doing the audit, the meaning of the audit remains the same. So whether the entity you are auditing, whether it is a profit oriented or a charitable organization, non-profit oriented, the meaning of the term audit doesn't change, and the meaning of the term audit also doesn't change irrespective of size of the entity, whether entity is a small entity or a huge entity. The meaning of the term audit remains same, and irrespective of legal size, legal not legal size, legal form. What is meant by legal form? Whether it is a company, whether it is a partnership, whether it is a sole proprietor, whatever the legal form it might be, or it might be a cooperative society, or it might be a trust. So whatever the legal form it might be, the meaning of the term audit doesn't change. Understanding? And when this examination is conducted by the auditor with a view to express an opinion thereon, then you will call it as audit. Understanding? So if you perform this examination with a view to express an opinion thereon, then you will call such an examination as audit. So you need to remember, the ultimate purpose of audit is to give report, to give auditors the report, to express opinion on the financial statements, right? We will be seeing objective of audit in essay 200, we will be seeing it. So the objective of audit essay 200 describes, the second objective is to express an opinion thereon. So while discussing the objective, we will clearly analyze the complete objective, okay, in essay 200. So I guess you are clear with the meaning of the term audit, right? So once again, audit is an independent examination of what? Of financial statements, irrespective of legal size, legal form or size, whether profit oriented or not. When such an examination is conducted with a view to express an opinion thereon, then you will call such an examination as audit, right? Yes, sir. Now, during the audit, you will verify lot of things, right? We'll see some of the aspects, some of the examples of aspects that auditor verifies during the audit. Okay, see, auditor, while conducting the audit, he needs to see that financial statements would not mislead by ensuring that. So while conducting the audit, auditor needs to see that these financial statements, now tell me, who will prepare financial statements? Of course management will prepare, sir. Very basic question. Yes. Now the financial statements which the management has prepared, these should not mislead the users. That should be ensured by the auditor. So in ensuring it, what aspects auditor will verify? Some of the examples of aspects. So first of all, he will ensure that these financial statements which management has prepared, they are matching with the books of accounts or not. Correct or not? Whatever the financial statements you prepare, they should match with the books of accounts. Books of accounts are saying one thing, financial statements are saying another thing. How could it be possible, right? So auditor always ensures that the financial statements are in line with the books of accounts. So that is the first thing the auditor sees. Here accounts means nothing but financial statements. Okay, so the financial statements are drawn as per books of accounts. That's what the auditor will see in the first place. Next, in the books of accounts, lot of entries will be made. Sales entries, purchase entries, expenses entries, right? So whatever the entries that are made in the books of accounts, each and every entry should be supported by a document, sufficient appropriate audit evidence. So auditor should ensure that whatever the entry is written in the books of accounts, there should be a proper supporting document for each and every entry. See, entries in books of accounts are supported by SAI means sufficient appropriate audit evidence. Next, of course, whatever the transactions has taken place during the year, all those transactions should be entered in the books of accounts or not. Sales of 2 crores has taken place, entity has wrote in the books of accounts only sales of 1.5 crore. Can the entity do so? No, it should not omit any transactions. So auditor will see that also. And of course, the information that the entity presents in the financial statements, it should be clear, and also it should be unambiguous. Unambiguous means users should not get confused by reading that financial statements. See, if the entity follows accounting standards or the Indian accounting standards, and the entity prepares the financial statements as per schedule 3 format, there will be no unambiguity among the users. So here what the auditor will see to ensure that there is no unambiguity, auditor will ensure that the financial statements have been prepared as per applicable financial reporting framework, that is nothing but accounting standards or Indian accounting standards. And schedule 3 what Companies Act schedule 3 contains the format for preparation of financial statements, right? As per that format only you have to prepare financial statements. And financial statement amount should be properly classified. What is meant by classification of financial statement amounts? So there are assets should be properly classified into current, non-current. Similarly, liabilities also current, non-current. And if there is any capital expenditure, you should not put it in P&L. It should be properly classified in the balance sheet. Only revenue expenditure should be brought to P&L. This is nothing but classification. So auditor, during his audit, he will also ensure that management has properly classified the amounts in the financial statements. Getting it? And the final thing, the accounts. Here accounts means you assume them as financial statements. Okay, so the financial statements, they should present true and fair view. What is meant by true and fair view? True and fair view means simple: whatever is the actual picture, picture should be shown by the financial statements. Then you will say that financial statements are showing true and fair view. Getting it? Yes. So these are the 6 points auditor verifies during the audit. See, these are just examples. Still lot of things auditor will verify in the examination. If at all a question comes during the audit, what are the examination points or what are the aspects that the auditor will verify to ensure that financial statements are not misleading? You need to write these 6 points. Understanding? Yes. So I hope it is clear till now. No doubts, I guess. Sir, can I watch this video later if I can't be able to watch in live? Yes, these videos, they will be available on YouTube itself. Whenever you wanted, you can watch them. Okay, I'll not be deleting these videos. I guess there are no doubts still here. Next we'll move into benefits. So benefits of audit. What are the benefits of audit? See, if you want to do any activity, anything you wanted to do, only if you get a benefit out of it, you will do. Otherwise, why will you do? Correct or not? Similarly, companies also, entities also, only if they get some benefit out of audit, they will appoint auditors and they perform audit of their financial statements. If companies don't get any benefit, why will they appoint auditor? Unnecessarily waste of fees, they will think. Correct or not? So what benefits organization will get because of this audit, that we'll see. First of all, if see here, I told you that, or you also know that financial statements are prepared by management. Yes, management prepares financial statements. And tell me, who will conduct day-to-day operations of the company? Management itself take care, right? Management itself will take care of day-to-day business activities of entity also. So management is conducting the business and management is also preparing the financial statements. Both things management only doing. That means, is there a possibility that any frauds that the management has done while doing the business, management will try to cover up them while preparation of financial statements? Is there such possibility? Yes, of course, 100% possibility is there. So users, that is stakeholders, they don't believe on the financial statements that the management has prepared until and unless an independent auditor conducts audit of the financial statements and the independent auditor provides assurance to the users. Until and unless independent auditor does not provide assurance to the users, they will not believe on the financial statements that the management has prepared. Correct? So this is the first advantage. Audit will give confidence, assurance to the user. See, assurance means nothing but confidence. Understanding? The name of the subject is audit and assurance, right? So audit means verification of financial statements. By verifying the financial statements, auditor will give assurance, that is confidence to the users, right? Yes. So the first advantage is that only. Auditor, he will give confidence to the users. Next advantage, of course, in case of companies, shareholders are different and management is different, right? Shareholders, that is owners, they won't manage the company. Management is different. So now audit will give audit will act as a independent mechanism for the shareholders. So similar, just like in the previous point, audit gives confidence to the users. Here also, auditor, by acting independently, he will give confidence to the users. So audit will act as a independent mechanism. Mechanism means nothing but a process. Okay, so audit, by being independent, it will help the shareholders, so that shareholders can rely on the financial statements. So that is the second benefit, which is independent mechanism. Next, of course, moral check. What is this moral check? See, now in the organization, employees of the organization, they know that at the end of the year, auditor will come and he will do audit of financial statements, and if there are any frauds, if there are any misstatements in the financial statements, this bloody fellow auditor will find out them and he will communicate to the shareholders. This process employees know. Okay, employees are having idea that if they commit any frauds, auditor will come at the end of the year and he will find out us. Now, if employees know this, will they commit fraud? No, they will think twice while committing the fraud. So, audit will also act as a moral check on the employees, preventing them from committing the frauds. Understanding? So, one more advantage of audit is it acts as a moral check. And of course, every business, it has to pay tax. Correct or not? To the government, it has to pay tax. Tax will be paid on, of course, profit. Right? Now, company told that our profit is 1 crore rupees and 25% or whatever the tax is, we are paying 25 lakh rupees tax to the government. Now, how will the government believe that whatever the profit entity has shown, that profit is correct only? How the government will get a belief? Might be entity might be covering up some of the profits in order to avoid taxes. Is there such possibility? Yes. So audit will also help the government to ensure that whatever the profit that has been shown in the financial statements, that profit is correct only, and whatever the tax that has been paid on that profit, that the tax is calculated correct only. Like this, even the government will get assurance, understanding, just with respect to tax, determination of tax. And next, when any company or any business wanted a loan, and they go for a bank asking for a loan, bank, we wanted a loan, we wanted to expand our factory, please give us loan. Will the bank immediately take money and it will give the loan? No. What the bank will say, first of all, give me your audited financial statements, I will check what is your financial position, what is your financial performance. Based on that, I will take the decision of whether to give you loan or not. So here, audited financial statements are also helping the bankers to take a credit decision, correct or not, whether to give loan or not. For taking that credit decision, audit is helping, audited financial statements is helping to the bankers. Next, of course, the basic thing, the purpose of audit. During the audit, auditor will identify frauds, auditor will identify errors, but however, you cannot identify all the errors, all the frauds, because of inherent limitations of audit. We will see that. But one of the advantages, you will identify frauds and errors, right? So this is also one of the advantage of audit. Next, review of controls. What is control? Control means we will be discussing in depth about control in fourth chapter, risk assessment chapter. Here I'll just briefly tell you. Control means, let's say for example, there is cash in the organization. Cash means wherever there is a cash, there is a risk of theft. Someone will come and steal the cash. There is such risk. I am not telling that for sure cash will be stolen. There is a risk. Now, to avoid that risk, what you can do? You can implement controls. Best example, CC camera. You can implement a CC camera, right? So that is best example of control. Now, auditor, he will review controls also, understanding. So whatever the controls that the organization has established in its business, all those controls will be reviewed by the auditor. See, with respect to controls, there is a lot of discussion. Basically, you need to remember this. Auditor is having no responsibility to review the controls. Okay, auditor need not review controls, but auditor will review the controls so as to make his work of audit easy. Okay, to make his audit work easy, auditor will review the controls even though there is no responsibility that has been fixed on him. Understanding? No responsibility fixed on him means, see, management appoints the auditor, and auditor has to provide opinion on the financial statements, right? So there is a responsibility on the auditor to provide opinion on the financial statements. Like that, there is no responsibility on the auditor to provide opinion on the controls. Management cannot ask the auditor, you verify all the controls and tell us whether controls are working properly or not. No, management cannot ask like that, because auditor is having no responsibility as part of financial audit to verify the controls. But he will verify. Why? By verification of controls, his work of audit becomes easy. How it becomes easy, we will see in chapter number 4. We will see. As of now, you just remember that there is no responsibility on the auditor to verify controls, but to make his work of audit easy, he will verify the controls. Understanding? Is it clear till now? Yes. There is one more point with respect to control. I'll just tell you that point. and I'll move forward. So I told you that auditor is having no responsibility to verify the controls, right? There is an exception to this. Auditor has to verify internal financial controls over financial reporting. So, see, general rule is that auditor is having no responsibility to verify controls, but internal financial controls over financial reporting, that controls auditor has to verify, and auditor has to give opinion on these controls, because Companies Act 2013 puts a responsibility on the auditor to verify these internal financial controls over financial reporting. If you see to the main audit report, there will be a annexure A. Annexure A will be nothing but this report on internal financial control over financial reporting. Understanding about this internal financial controls over financial reporting, we will be discussing further, okay, in our classes. Getting it? Yes. So is there any doubt till now? I guess there is no doubt. Okay, let's move forward. So all these are the benefits of conducting audit. Next, some more aspects related to audit. Let's see. Now, the subject audit is a playboy. Why it is playboy? Because it is having relationships with various other subjects. The subject audit is having relationship with various other subjects. How it is related with various other subjects? First of all, audit is related to accounts. Yes, because in audit, the one that we verify is accounts only. So the subject audit is related to accounts. Yes, and audit is also related to law. See, during our audit, we have to comply with various laws. We have to check compliance with various laws, like Companies Act compliance we need to see, income tax compliance, GST compliance, PF compliance, ESI compliance, like this. Whatever laws are applicable to the entity, all that compliances we need to see. Correct or not? So, audit is also related to law. Yes, sir. Next, audit is also related to economics. See, in CA Foundation, you might have learned economics. So, in economics, the terms that will be used like rate of interest, inflation, right? So, auditor, he should be well aware of economics that are working in the industry of the company in which economics of the industry in which the client is located. So let's say auditor is doing audit of a car manufacturing company. So what are the economics of that car manufacturing industry? Auditor should be well aware of that. Correct or not? So audit is also related to economics and of course financial management. So various decisions, capital budgeting decisions, working capital decisions, right? And this how much debt the company should have, how much equity the company should have, all these decision makings which are related to financial management, auditor will see them. Correct or not? So audit is also related to financial management. Of course, whatever the subjects that you read in your CA intermediate, CA foundation, CA final, all those subjects, they are related to audit. So if you wanted to be efficient in audit, it is not sufficient if you just learn audit. Okay, practically when you do the audit, you should be well aware of all these subjects. So you should know about accounting, you should know about laws, you should know about financial management, you should know about economics, still lot of subjects. See, next, you should also have knowledge about production. So if you are conducting audit of a manufacturing company, then let's say, for example, a simple example I'll give. For manufacturing one finished good, 2 units of raw material is required. Okay, this is the ratio. 1 finished good, 2 units of raw material. Now, during the year, entity manufactured 1000 finished goods. So, it would have consumed 2000 raw material, right? Now, management in the books of accounts, it is showing value of consumption for 3000 units of raw material. Now, generally, 1 unit of finished good consumes 2 units of raw material. But in the books of accounts, for 1 unit of finished goods, management showing 3 units of raw material. So, there is something wrong. So, to identify this, first of all, auditor should have knowledge that for manufacturing this product, it will incur 2 units of raw material. If auditor itself doesn't know that, how will the auditor question the management? Whatever the management says, auditor will have to blindly believe it. Correct or not? So, it is important that auditor should also have knowledge about production. Next, stats and math. Of course, statistics, the basic concept that you learn in the statistics is sampling. And in case of audit, you will use sampling technique. Correct or not? So when you go for audit of an entity, let's say for example, you went for audit of a Reliance Industries. Now Reliance Industries is such a huge entity. Can you audit each and every transaction? There will be crores of sales transactions. All the sales you will vouch them, you will audit them, all of them? No, you will apply sampling technique. So you are using a concept of a statistics. Understanding? Yes, sir. Next, of course, data processing. What is this data processing? Data processing is nothing but how the computer system processes the data that you have given as an input. Like these days, nowadays, all the organizations, they are maintaining books of accounts in some computer software, right? They are using one or the other computer software for maintenance of books of accounts. So let's say, for example, basic example, tally will take. So in the tally, input you will give as journal entry, right? So the input, the starting point of a transaction of entering, the starting point of entering a transaction into tally is journal entry. So once you pass a single journal entry, the input, it will be processed by the tally software in a different ways. So in this journal entry, 2 accounts are involved. Let's say for example, sales. Okay, you have received cash. Okay, cash sales you have made, cash account debit to sales. This is a journal entry you have passed. Now system will process, cash account gets updated, sales account get updated, right? Yes. Next, relevant amounts gets reflected in trial balance, right? Next, this sales amount, it also gets updated in the profit and loss statement. This cash balance, it also gets updated in the balance sheet. So you have just passed a single entry. Software itself processing that entry in a different directions. So in order to know, or in order to understand how this software or how the system is processing the entry that I have given as an input, auditor should have knowledge about data processing. Understanding? Yes. So audit is also in such a manner related to data processing. Next, final one, behavioral science. What is behavioral science? Behavioral science is nothing but study of how other persons behave. Sir, why should auditor know about behavior of other people? What nonsense. Now, practically, when you go for a audit, so generally, what happened? For me, it happened. So, one of the client, during my article shift happened. So, one of the client, I went asking some documentation, some evidences were required. I went. He was some male employee, some senior accountant. I went, asked for the documents. He said that, okay, I will give. 2 hours passed, 3 hours passed, 4 hours passed. He didn't give. Again, I went. I asked, yeah, I will give. He said. He didn't give. Next day also, he didn't give. I was not knowing what to do. There was one of my colleague, another article assistant. She was lady. Now this time, I sent that girl. You please go and ask the documents to him. I asked him. He is not giving me. You please go and ask. She came back with the documents in her hand. So if you wanted to get the information, you should know how the other person behaves. So if you ask the information the other person, in which manner you will get the correct information, you will get the information in lesser time. So you should study the behavior of other person. Understanding? So behavioral science is also useful to the auditor during the audit. Getting it? Yes sir, got it sir. We will also send our lady articles for getting the information sir, during the audit. See, always that doesn't work. You need to understand, you need to analyze the behavior of the other person. Next, is audit mandatory, voluntary? Tell me. See, you can't straight away say whether audit is mandatory or audit is voluntary. It depends. If it is a company, audit is mandatory. If it is a partnership or a sole proprietor, statutory audit not mandatory. But as per Income Tax Act, if the thresholds cross, tax audit gets mandatory, right? And some organizations like, let's say for example, charitable organizations like schools, they might get audit of their books of accounts for receiving some grant. Like generally what happens is, let's say for example, there is a school, okay, charitable school, which is running the school on a charitable basis. Now government has given a grant to this school. Government said that we are granting 10 crore rupees to you. School said, okay, give me 10 crore rupees. Government said, no, we will not give 10 crore rupees immediately. First of all, we will give you 2 crore rupees. You spend that 2 crore rupees. After that, you again come, we will give balance amount. Okay, 2 crore rupees you will give. School has taken 2 crore rupees. Successfully spent 2 crore rupees on free education. So after completing 2 crore rupees, again school went to the government. Government, I completed 2 crore rupees successfully. Give me balance 8 crore rupees. Now government says, Acha, you completed 2 crore rupees, expended complete 2 crore rupees on education. What is the proof? What is the proof that you have spent 2 crore rupees on education only? You do one thing. You get your books of accounts audited by a chartered accountant. And let me know that you have genuinely expended 2 crore rupees for education only. If you get such an audit report, then I will give you balance amount. Like that the government will say. So charitable organizations also, for the purpose of getting donations, they will get their books of accounts audited. And some other organizations, even though audit is not mandatory for them, we have seen a lot of benefits of audit, giving confidence to the users, to the government for calculation of tax, for the bankers for taking trade decisions. To get all these benefits, some organizations, even though audit is not mandatory, they might get their books of accounts audited. Getting it? Yes. So whenever anyone asks you whether audit is mandatory or not, you should not say a straight question. You should ask them for which type of entity you are asking. Is it a company? Is it a partnership? Is it a sole proprietor? And are you asking about a tax audit? So you need to reverse ask them questions. Understanding? Yes. So is audit mandatory or voluntary? Not always mandatory, but in case of companies it is mandatory. And some organizations, to get the benefit advantages of audit, they might get their books of accounts voluntarily audited. And tax audit, if the thresholds crosses 1 crore, 10 crore, that thresholds are there in Income Tax Act. If those thresholds crosses, then tax audit becomes mandatory. And in case of schools, I told you just now example. So some charitable organizations, for getting grants, they get their books of accounts audited. Next, who will appoint the auditor? Tell me. See, in case of company, of course, members will appoint the auditor. However, first auditor, the appointment of a first auditor, it can be done by board of directors as per Companies Act provisions. The appointment of first auditor, it can be done by board of directors, but however, subsequent auditors, generally shareholders will appoint the auditor, right? And in case of a partnership firm, partners will appoint the auditor. And in case of a sole proprietor, that person, the sole proprietor, he himself will appoint the auditor. Got it? And in case of government companies, this is also important. In case of government company, who will appoint the auditor? C&AG, Comptroller and Auditor General of India will appoint the auditor. Getting it? Yes, sir. Got it, sir. So next, so now we'll start with essay 200. So what is essay 200? Essay 200 establishes the base for complete auditing standards. Whatever the auditing standards that we discuss, for all those auditing standards, the base is established by essay 200. So if you see essay 200, it speaks about overall objectives of independent auditor and conduct of audit in accordance with the standards on auditing. Sir, what, sir? The name of the standard itself is this much huge. How should we remember, sir? Don't worry. See, now you divide it into two parts. First one, overall objectives of independent auditor. You try to understand. Objective means what? Objective means goal, target that has to be achieved. That is known as objective. So, essay 200 fixes goal for the auditor. See, auditor, you are doing audit now. For your audit, what is the target that you have to achieve? That will be fixed by essay 200. Understanding? Overall objective of independent auditor. And essay 200 also says that auditor, you are doing audit now. This audit should be done by auditing standards, should be done as per auditing standards. It should be done by you only. You have to do the audit as per auditing standards. Getting it? So, see, and conduct of audit in accordance with standards on auditing. Easy, very easy. Yes, sir. Very, very easy, sir. For you, it is easy, sir. For us, it is, we are not able to pass audit. You will pass if you study it in a correct manner, correct way. You will pass. So, now one more question to you. See, in this complete audit subject, we will be discussing auditing standards. You should always remember that whenever auditor does the audit, auditing standards are mandatory. It is not voluntary. Auditor has to mandatorily comply with all the auditing standards. Getting it? Yes, sir. So see, this standard, this essay 200, it deals with objective of independent auditor. Yes, sir. In the name of the standard itself, we have learned it. What is the objective? Tell us that. See, the objective of auditor that has been fixed by essay 200 is to obtain reasonable assurance that financial statements as a whole are free from material misstatements, whether due to fraud or error, thereby enabling the auditor to express an opinion on whether financial statements as a whole are prepared as per applicable financial reporting framework or not. Sir, what, sir? What did you say, sir? Please explain, sir. Yes. See, this objective, it is so important that you have to memorize it in such a way that even early morning, 3 o'clock, someone comes and wakes up you and asks, tell me objective of audit. You have to say just like that. Understanding? In such a manner, you have to memorize it. So, memorize means you should not by heart. You should understand it. If you understand it, easily you will be able to remember it. So, we will try to understand what the objective is trying to say. Okay? Yes, sir. We will understand, sir. So, here in this objective, there are certain terminologies. If you understand that terminologies, entire objective becomes easy. So, first terminology is reasonable assurance, that we need to understand. Next one is material misstatement, that also we need to understand. And next one is applicable financial reporting framework. If you understand these three terms, just like this, you can remember objective of audit. So, we'll start with reasonable assurance. Assurance means, I guess we already know. Assurance means nothing but providing confidence to the users, right? That is the assurance. Now, audit is not just providing assurance. It is providing reasonable assurance. What is this reasonable assurance? See, you should remember there are three types of assurances. See, types of assurances. There are three types of assurances. What are those three types of assurance? First one, absolute assurance. Now, absolute assurance means auditor, he is giving 100% confidence to the users that users, I have done the audit of these financial statements and there is not even a single misstatement in the financial statements. Like this, the auditor is saying. In such a situation, it is said that auditor is giving absolute assurance. So if you say or if you give 100% confidence to the users, you will call it as absolute assurance. Now you need to remember, auditor can never give absolute assurance. Auditor in his life, he can never give absolute assurance. He can only give reasonable assurance. Why he cannot give absolute assurance, sir? I will give absolute assurance. I will do audit, I will give absolute assurance. No, you cannot give absolute assurance because there are inherent limitations of the audit. Because of the inherent limitations of the audit, auditor cannot give absolute assurance. Understanding what are those inherent limitations, we will see. So these inherent limitations of the audit will prevent the auditor from giving absolute assurance. Okay, so absolute assurance means 100% confidence. That 100% confidence auditor can never give in the audit. He can only give reasonable assurance. Now, what is reasonable assurance? Reasonable assurance is a high level of assurance, but not absolute assurance. Sir, high level of assurance, but not absolute assurance. What is that high level of assurance? You can say 99% confidence, but not 100%. Okay, auditor, see, you cannot convert into the terms of a percentage, but we can say that reasonable assurance is a level of assurance which is lesser than 100%. Understanding? Yes. So absolute assurance means 100% confidence. Reasonable assurance means a level of assurance that is less than 100%. So auditor in his audit, he will only give reasonable assurance. Okay. Absolute assurance, okay. Reasonable assurance, okay. There is also another type of assurance which is limited assurance. What is this limited assurance? See, again, the level of assurance, I will explain you this thing detailedly within just 2-3 minutes. I'll explain you. Okay, the level of assurance that you will give in the limited assurance is lesser than reasonable assurance. Sir, what is this level of assurance? We are confused. Don't worry, I will give you clarity. My duty is to give you clarity. See, now you are doing audit, right? Yes, we are doing audit. In audit, what you will do? Doing audit means what? We are doing audit means what? What you are doing in audit? You are performing audit procedures, correct or not? Yes, sir. Yes. In audit, we will perform audit procedures. Why you are performing audit procedures? By performing audit procedures, what will you get? You will get audit evidence, right? Yes, sir. We will get audit evidence. By performing audit procedures, we will get audit evidence. By getting audit evidence, what you will do? Based on audit evidence only, you will base your opinion, correct or not? In the audit report, you have to give your opinion whether financial statements are showing true and fair or not. You have to give opinion, na? That opinion on which you will base. On this audit evidence only you base. Yes, yes, correct, sir. What you are saying is correct. So based on audit evidence, you will on the basis of audit evidence, you will provide opinion, correct? You understood this flow of audit? Yes. Now, see, if you are doing audit, you will provide reasonable assurance, correct or not? Reasonable confidence you provide? Yes, sir. Now, to provide a reasonable assurance, how many audit procedures you have to perform? that many number of audit procedures you will perform. Okay, in order to get a reasonable assurance how much audit I have to do and how much audit evidence I have to obtain, that much number of audit evidence and audit procedures you will perform, so as to enable yourself to give reasonable assurance. Understanding? So in fact, in case of audit, you will perform almost all the audit procedures. Getting it? So that by performing all that audit procedures, you will get a complete audit evidence and you will be in a comfortable position to give reasonable assurance. Getting it? Yes, that is about reasonable assurance. Now coming to limited assurance. See, observe carefully. Limited assurance. Now, in case of limited assurance, the level of confidence that you wanted to give is less than the reasonable assurance. Correct or not? Yes. So, the amount of audit procedures that you perform will also be less. When compared to the reasonable assurance audit procedures, you will perform lesser audit procedures here in case of limited assurance. And since you have performed lesser audit procedures, you will obtain lesser audit evidences. Understanding? Since you have obtained only lesser audit evidence, you will be giving only limited assurance. Getting it? Understood? So, this reasonable assurance engagement, you will be calling it as audit. This limited assurance engagement, you will be calling it as review. So, in case of review, auditor gives limited assurance. For whom review will be done? Generally, this limited review is mandatory for listed entities. For the listed entities, on a quarterly basis, they have to conduct a review of their quarterly financial statements. So, in that review, see, that review also will be done by statutory auditor of the company. Okay, company would have appointed a statutory auditor for doing audit of a complete set of financial statements for the complete year. That auditor only will do the review of 3 months financial statements, that is quarterly financial statements, and he will give review report. These review report basically has to be submitted to the stock exchanges. Okay, the listed companies, they have to submit the limited review reports to the stock exchange. So in that limited review report that the auditor gives to the listed entity, he will provide a limited assurance. He will not provide reasonable assurance. Understanding? I guess now you got a clarity with respect to what is meant by limited assurance and reasonable assurance. Let me know if you have any doubt. No doubt. Let me know. Any doubt? Understood everyone? Limited assurance and reasonable assurance. See, this concept of limited review again we will be using further in this class only. Understood? Let me know in the comments. What? No one replying. Okay. Okay. Done. So that is assurance, absolute assurance, reasonable assurance, and limited assurance, right? Yes, sir. So now we understood what is meant by assurance. Now we will understand applicable financial reporting framework. What is this applicable financial reporting framework? First of all, what is meant by framework? Framework means, see, framework means nothing but a set of rules and regulations, certain guidance that has been given. If the framework is related to financial reporting, you will call it as financial reporting framework. Some of the examples: accounting standards, Indian accounting standards, these are nothing but financial reporting frameworks. Correct or not? So, if you see, for example, the accounting standards you take. So, any accounting standard you take, it will contain four things. Let's say, for example, accounting standard related to inventory. Now, if you read the accounting standard related to inventory, it will give you guidance about amount. So, at what amount you have to recognize the inventory in the financial statements, that guidance will be given to you by the accounting standard. And accounting standard will also give you guidance about classification. Classification means whether inventory, will you classify it as a current asset or non-current asset? You will classify it as a current asset. So why you are classifying it as current asset? Because applicable financial reporting framework has told that you have to classify it as a current asset. So applicable financial reporting framework will also give you guidance about the classification of a particular item. Next, it will also give you guidance about presentation. Presentation means how you need to present it in the notes, how you need to present the inventory in the on the balance sheet, on the face of balance sheet, where you need to present the inventory. That guidance also will be given to you by the accounting standard. And finally, disclosure. So what disclosures you have to give related to inventory, that guidance also will be given by financial reporting framework. Understanding? So like this, whatever the accounting standard or Indian accounting standard you read, you will find a discussion with respect to these four aspects. Okay, any item you take, related to that item, these four aspects will be discussed. So you can say that in the financial reporting framework, discussion related to these four aspects will be done. Okay, yes sir. Now, so let me change this from accounting standard to financial reporting framework. Now, financial reporting framework is telling the management to follow these rules for preparation of financial statements. Now, management, while preparing the financial statements, what the management has done is, why should we follow your rules? We have our own rules, we will follow our own rules. Like this, management has followed some other rules and some other regulations related to, see, this we will call it as ACPD. Okay, A means amount, C means classification, P means presentation, D means disclosure. So management, what it has done is, instead of following the ACPD that has been prescribed by the financial reporting framework, management has followed their own ACPD. Okay, management has followed a different rules and regulations with respect to amount to classification, presentation, disclosure. Now this situation is there na, this situation will be called as misstatement. Understanding? So if amount to classification, presentation, disclosure that management has followed for preparation of financial statements is different from the amount to classification, presentation, disclosure that the applicable financial reporting framework has prescribed, then you will call such a situation as the misstatement. Understanding? So I guess you understood what is meant by misstatement. And this misstatement, it can occur either because of error or because of fraud. Getting it? Error means unintentional, fraud means intentional, wantedly you committed. So this is the whole situation of misstatement. Getting it? And auditor, he is concerned only with material misstatements. He is not concerned with immaterial misstatements. Now, which misstatement is material? That will be decided by the auditor as per SA 320. In SA 320, we will be discussing how to calculate materiality. Benchmark multiplied by a percentage. That formula we will be discussing in SA 320 to decide materiality. Understood? Yes. So we have discussed the financial reporting framework. We have also discussed misstatement. And this financial reporting framework is there. Na? This financial reporting framework, it is of two types. One is fair presentation framework. Another one is compliance framework. So what is fair presentation framework? What is compliance framework? See, financial reporting framework is having certain rules, regulations with respect to amount to classification, presentation, right? And along with these rules and regulation, financial reporting framework also saying that, see user, if you feel that if you give more disclosures than required by the financial reporting framework, you will be able to achieve more fair presentation in the financial statements. You are free to give more disclosures. Or if you feel that if you deviate from the requirements of financial reporting framework, you will achieve more fair presentation. In such a situation, you are allowed to deviate from the financial reporting framework. If these two situations are allowed by the financial reporting framework, then you will call such a financial reporting framework as the fair presentation framework. What two situations should be allowed? Financial reporting framework should allow the user, not the user, the management, to deviate from the framework or to give additional disclosures than required by the framework in order to achieve more fair presentation. In such a situation, you will call it as fair presentation framework. Next, compliance framework means, see, generally our accounting standards, Indian accounting standards, these are fair presentation frameworks only. Okay. Compliance framework means you have to strictly follow whatever is prescribed in the compliance framework. No other option, no deviation. You have to strictly follow. So generally, for some of the cooperative societies, state governments will issue certain financial reporting frameworks. So those financial reporting frameworks which are issued by the state governments for the cooperative societies, they are compliance frameworks. Okay, the cooperative societies have to strictly follow that framework. No deviation is allowed. Getting it? Yes, sir. Got it, sir. So that is applicable financial reporting framework. So we have done with assurances. We're also done with applicable financial reporting framework. Now we will see this definition once again. Now you will be able to understand the objective. So objective of auditor is to obtain reasonable assurance about what? That financial statements as a whole are free from what? From material misstatements. These material misstatements can occur whether due to fraud or error, thereby enabling the auditor to express an opinion on whether financial statements are prepared in accordance with applicable financial reporting framework or not. So after obtaining that, he needs to report the same in his audit report. That is the next object. Getting it? So this is the objective of auditor. So daily how many hours this revision will be done? See, mostly 2.5 hours to 3 hours. Based on the length of the chapter, it will vary 2.5 to 3 hours. Okay, mostly 2.5 hours. Next, we'll see requirements on the part of auditor. So SA 200, we have seen objective of audit. SA 200 also prescribes certain requirements on the part of auditor. So first of all, qualities that the auditor has to possess. Now in these qualities, firstly we will be seeing the fundamental principles that the auditor needs to comply with. So ICAI, it has issued code of ethics. In that code of ethics, 5 fundamental principles has been given by ICAI. Same fundamental principles even prescribed by SA 200 also. So what are those fundamental principles? We'll see. Firstly, integrity, objectivity, confidentiality, professional behavior, professional competence, and due care. So what are these? I'll explain. So integrity means being truthful, being honest. So whatever is the actual situation, that same actual situation should be presented by the auditor. He should be always truthful. He should not do misreporting. That is known as being or having integrity. Next, objectivity. Objectivity means, see, generally objectivity is related to decision making. So decision making, it can be of objective decision making or subjective decision making. So subjective decision making means what? While taking any decision, you are dependent on your emotions. If you take decisions based on emotions, it will be called as subjective decisions. If you take decisions based on facts, it will be called as objective decision making. So auditor, he should always take objective decision making, not subjective decision making. Getting it? Yes. So that is the second fundamental principle. Next, of course, confidentiality. Simple thing, whatever the information that the auditor gets during the audit from the client, he should not disclose it to third party. He needs to maintain confidentiality of that information. Yes sir. Next, he should behave professionally. So being a chartered accountant, being a professional, you should not behave unprofessionally. You should not show unprofessional behavior. And of course, final one, professional competence. What is meant by professional competence? Competence means nothing but capability. So only if you have knowledge to do a particular work, you have to accept it. Okay, so a company has come to you asking you to do the audit of financial statements, but you don't have any knowledge about how to do the audit, then you should not accept that engagement. That is known as professional competence and due care. So only if you are professionally competent, capable to do that work, you should accept it. Otherwise you should not accept it. Getting it? So these are the 5 fundamental principles which the auditor should comply. Next, in the qualities itself, we also have this professional judgment and professional skepticism. So students, they will be confusing with respect to this professional judgment and professional skepticism. Let me explain you. So professional judgment means, while reading books, you will obtain knowledge. During your CA course, you will obtain knowledge. During your articleship, you will gain experience, right? So after becoming a chartered accountant, when you are doing audit, applying all this experience, expertise, knowledge for doing the audit and for taking the decisions is known as professional judgment. Okay, so professional judgment means applying all the knowledge, skill, expertise for taking a particular decision is known as professional judgment. Clear? Next, professional skepticism. What is meant by professional skepticism? See, professional skepticism involves 3 things. 3 qualities together will form professional skepticism. What are those 3? Firstly, being alert to the misstatements. So auditor, while doing the audit, throughout the audit, he should be very much alert to find out the misstatements. So is there any misstatement in this area? Is there any misstatement in this area? Whatever the area he is auditing, He needs to be very much alert to identify misstatements immediately. Understand, this is the first part of being or having professional skepticism. Nothing but being alert to the misstatements. Next part is questioning mind. Whatever you see in the audit, whatever you find in the audit, you have to keep on questioning about it, because only when you question, you will get more information about it. So you should always have questioning mind. Getting it? That is also part of professional skepticism. And finally, whatever the audit evidence you have obtained, you need to critically assess that audit evidence. So management has given a particular document, you should not just take the document and keep it in the audit file. You need to critically assess that audit document. Okay, is that audit document correct only? Should I ask for some more documents? Like that, critically you need to assess whatever evidence you have obtained. Even that also forms part of professional skepticism. Getting it? So all these three things together, they contribute or they form part of professional skepticism. So I guess now you are clear with the meanings of professional skepticism and professional judgment. Next, independence already we have discussed, right? Yes, sir. Next, duties of auditor. See, the main duty of the auditor is to perform audit procedures, and after performing audit procedures, obtaining sufficient appropriate audit evidence. And he should also conduct the audit in accordance with the standards on auditing, right? So these are the things that are prescribed by SA 200. Next, now I already told you that auditor can never give absolute assurance. Auditor can only give reasonable assurance. Why? Because there are certain inherent limitations of the audit. Because of the inherent limitations of the audit, auditor can never give absolute assurance. He can only give reasonable assurance. So what are the inherent limitations of the audit? We will see it. Okay? Yes, sir. Come on, sir. So inherent limitations of the audit. First of all, the nature of financial reporting itself is such that it doesn't allow the auditor to give absolute assurance. Sir, what, sir? What you are saying? Nature of financial reporting means, what is meant by financial reporting? The process of preparation of books of accounts, and from that books of accounts preparing financial statements. This entire process is there, na? You will call it as financial reporting. Okay, now in preparation of financial statements, there will be certain items like provision for doubtful debts. Now, how many debts will become bad in the future? Will you know it? Will the management know it? No, management cannot exactly predict how many bad debts will occur in the future. But in the books of accounts, in the financial statements, management has to provide a provision for doubtful debts. It will just make a estimation, correct? So, based on estimation in the financial statements, management has provided provision for doubtful debts as 1 lakh rupees. But actually in the future 10 lakh bad debts has occurred. Now whatever the amount that the management has provided as provision, exact amount has not occurred as bad debts. So if a management itself, if the financial statement itself does not contain accurate amounts, how can auditor say that everything is correct? Correct or not? So this is one of the reason why auditor can never give absolute assurance. The nature of financial reporting itself is such that there will be certain amounts that will be shown in the financial statements which will vary in the future. Okay, best example is the provision for doubtful debts. Next, inherent limitations of the controls. So management has established internal controls. Now will that internal controls identify all the misstatements? No, internal controls are also having certain inherent limitations. Like we have seen example of that CC camera. So CC camera has been established to ensure that no theft of cash happens. Now, someone might come and he might put a kerchief on the CC camera and he can take away the cash. So, did CC camera identify who took away the cash? No. So, even the internal controls also has the inherent limitations because of which misstatements cannot be identified. Okay, how much audit you do also, some misstatements will be still there in the financial statements. So, auditor cannot give absolute assurance. Next, nature of audit procedures are also in such a way that they will not permit the auditor to give absolute assurance. See, while starting the class itself, I told you, when you go for audit of huge entities like Reliance Industries, you will not do audit of each and every item. Instead, you will use sampling. So, sampling means what? Let's say, for example, there are 1,000 transactions, 1,000 sales transactions. Let's say you are auditing sales, there are 1,000 sales transactions. You are not able to vouch complete sales transactions, so you have selected sample of 100 sales transactions from the 1,000 sales transaction, and you have performed audit procedures on 100 transactions only. And by performing audit procedures on sample of 100, you have identified a misstatement. One misstatement you have identified. Now what you will do? You will project this misstatement to population. How you will project? In a sample of 100, there is one misstatement, means in a population of 1,000, how many misstatements will be there? 10. Like that you will just project. Have you performed audit procedures on complete items, complete population? No, you have not performed audit procedures on complete population, but you are coming to a conclusion that there will be 10 misstatements in the complete population. How can you come to such exact conclusion? Not possible. But since because of certain limitations, wherein you cannot do audit of a complete transactions, you have used the sample and you are coming to a calculated conclusion. So this is also one of the reason. Now you are saying 10 misstatements are there. Will there be exactly 10 misstatements in the 1,000 items? No, there can be five misstatements only, or there can be 15 misstatements. Understanding? You did not audit complete population, so you cannot say exactly. Getting it? So the nature of audit procedures are also in such a way that they will not permit the auditor to give absolute assurance. So the nature of audit procedures, some of the examples include, you will use audit sampling, and when you go to the entity for doing the audit, who has to give the information for doing the audit? Books of accounts, financial statements, all these things management has to give. All the documents, everything management has to give. Now you will go to the management and you will ask the management to give information. Whether they give complete information or they hide some information, you cannot influence them. Correct or not? What you can do is you can just ask them. You cannot force them to give all the information. You don't know whether they are giving all the information or not. So if it is not in your hands whether management is giving complete information or not, how can you give absolute assurance on the financial statements? Getting it? This is also one of the reasons. So management may not provide complete information. And okay, let's say management has committed frauds in the financial statements or in the company. After committing fraud, will they leave it just like that? No, they will take each and every care to ensure that that fraud is not identified by anyone. Correct or not? So the person who has committed a fraud will ensure or will take every step to conceal the fraud, which becomes difficult for the auditor to identify the fraud. So this is also one of the limitation. And one more limitation, audit is not an investigation. Of course, there is a difference between audit and investigation. So in case of audit, you will just provide an opinion, a reasonable assurance you will provide. But in case of investigation, you have to find out the facts. Investigation is a fact finding approach. So if management has a doubt that in the area of cash the employees are committing fraud, then they will launch an investigation, and the investigator, he will go in depth in that area of cash to identify the actual facts. Understanding? That is investigation. So wherein in the investigation you will go in depth, but audit is not like that. Audit you will just broadly you will cover every area, but investigation it will not cover all areas. It will cover some areas, that some areas it will go in depth. Getting it? So audit is not an investigation to identify each and every fact. Getting it? So see the differences between audit and investigation. Of course, audit is a reasonable assurance and engagement, whereas investigation is a fact-finding engagement. You will critically examine the books of accounts in case of investigation. In case of audit, you will provide opinion, but in case of investigation, you have to find out the facts. What is the actual situation that has happened? You need to find out it. And the scope of audit is broad, right? So you will cover every area, each and every area of the financial statements, each and every area of the entity you will cover, right? Broadly you will cover every area, and it is general. But investigation is not like that. You will in investigation you will not cover all the area. Only areas that got affected by fraud you will cover, but you will in depth cover it. Understanding? So in case of investigation it is specific and narrow. So we have also completed differences between investigation and audit. Next, one more inherent limitation of audit is, see, for doing audit of company, you will not have years together of time. You will have limited time. So on 31st March, the financial year ends. Within 60 days, listed companies has to furnish their audited financial statements to the stock exchange. That means within 60 days, auditor has to complete the audit. And unlisted entities, by 31st October, they have to furnish their audited financial statements to MCA. That means within the 31st October, auditor needs to complete the audit. So auditor is not having huge amount of time to do the audit. There is a time limitations. In that time limitations, auditor cannot identify all the frauds, all the misstatements. So this is also one of the inherent limitation. And another one is future events. See, for this future events, you can take the same example I gave for nature of financial reporting, that provision for a doubtful example, doubtful debts example. Okay, yes sir. So almost we are completing the chapter. Within another 15 to 20 minutes, chapter will be done. Next, scope of audit. So scope of audit means, in the audit, which areas will be covered by the auditor. Scope means what is the areas, what areas auditor will cover in his audit. So what areas are included in the scope, what areas are excluded from the scope, both we will see. Okay, so firstly, what areas are included in the scope of audit? All the aspects of entity, whatever is getting reflected in the financial statements, each and every area, each and every item, auditor needs to audit it, right? So auditor needs to cover all aspects of the entity. And reliability and sufficiency of financial information. See, while doing the audit, management will provide various financial information, various documents to the auditor for the purpose of doing the audit. Now, whether those documents auditor can rely on them, how much reliance he can place on them, and are those documents sufficient for the purpose of my audit, or should I ask some more documents? Checking that, taking that decision also forms part of audit only. Understanding? So reliability of documents given by the management, and whether that documents are sufficient for the purpose of my audit or not, deciding that is within the scope of auditor only. Understanding? Next, proper disclosures in the financial information. So whatever the financial statements that the management has prepared, all the disclosures that are required as per schedule 3, as per financial reporting framework, whether all those disclosures has been properly given or not, checking that also forms part of auditor's duty. Okay, that is also within the scope of audit. Next, we will see some of the things which are not within the scope of audit. First one, most common one, auditor, he will not prepare financial statements, right? Management has to prepare financial statements. So preparation of financial statements is out of the scope of auditor, right? Next, some duties which are falling outside the domain of competence of the auditor. Domain of competence means, see, auditor, he is expert in auditing and also in accounting, right? Now, in the books of accounts, there is a particular building. That building has been valued at some 10 crores. Management is asking, auditor, you once check whether the valuation of building 10 crores, is it correct or not? How can the auditor check? Is auditor expert in valuation of building? No. So those kind of things which are outside of competence of auditor are not within the scope of auditor. Valuation of building, you have to ask for the engineer, correct or not? Yes. So this is out of scope of auditor. Next, authentication of documents. Authentication of documents means, management has given a particular document, there are signatures on the document, and auditor taken the document and accepted as audit evidence. Now later on it was found out that the signatures on that documents are forged. Now how can auditor know whether that signatures are forged signatures or normal signatures? That will be identified by forensic department, correct or not? So checking the authenticity of the document, auditor, it is not within the scope of audit. Getting it? Yes sir, got it sir. So these are the things which are within the scope of audit and outside of the scope of audit. Next, elements of assurance engagement. See, assurance engagement means, we will be seeing about assurance engagement and audit. There is a little bit of difference between assurance engagement and audit. In this concept, we will be seeing it. Engagement and quality control standards. I will explain you the difference between assurance engagement and audit engagement. Whether both are same or both are different. Why you cannot call audit as assurance engagement? I'll be explaining it. Okay. So before that, we will see the elements of assurance engagement. There are 5 elements for assurance engagement. First one is parties involved in the assurance engagement. So there are 3 parties that are involved in the audit engagement or the assurance engagement. Who are they? First one, of course, auditor. Auditor is the main party, right? Yes. Next, management or the responsible party who will prepare the financial statements. And finally, users, for the purpose of whom this audit is done. So these 3 are the people involved in the assurance engagement, right? So 3 party relationship. Who are they? Practitioner, nothing but auditor. Responsible party, nothing but management. Intended users, nothing but stakeholders. Next element is subject matter. Subject matter means, see, in case of audit, the subject matter is financial statements. So the item on which you are providing assurance is known as a subject matter. In case of audit, subject matter is financial statement. Understood? Yes. Next, suitable criteria. Criteria means, so in case of audit, what you will say? Financial statements has to be prepared as per applicable financial reporting framework. So subject matter has to be prepared by following certain criteria. So in case of audit, subject matter is financial statements, criteria is applicable financial reporting framework. Understand? So the framework or the rules as per which subject matter has to be prepared is known as suitable criteria. Getting it? Yes sir. Next element is sufficient appropriate audit evidence. Of course, for the in the audit, the main thing is audit evidence that you obtain. That is also one of the element of assurance engagement. And finally, the assurance report that you give. So these are the 5, see, written assurance report. So these are the 5 elements of the assurance engagement. Got it? Yes sir. Next, audit versus review. I have already explained you audit versus review. So in case of audit, which type of assurance you will give? Reasonable assurance you will give. In case of review, which type of assurance you will give? Limited assurance you will give. Audit is done for historical financial statements. Review is also done for historical financial statements. Correct or not? Yes, sir. And in audit, you will perform extensive audit procedures, whereas in case of review, you will perform fewer audit procedures, limited audit procedures you will perform. Right? Yes. So these are the differences between audit and review. Next, purpose of standards. What is the purpose of auditing standards? So these auditing standards which we are learning, why they have been issued, what is the purpose of issuing these auditing standards? There are various purposes. First one is they will act as a benchmark. Benchmark means a criteria as per which audit has to be done, like set of rules. Okay, so every chartered accountant while doing the audit, he has to follow this set of rules. So auditing standards will act as a set of rules, will act as a benchmark. Understand, this is the first purpose of auditing standards. Next, of course, if you do the audit as per the requirements specified in the auditing standards, the quality of audit gets improved. So improves the quality of financial reporting. Yes, financial reporting quality increases, even the quality of audit also gets increases. Next, promote uniformity. See, now each and every chartered accountant, if he gives his own audit report, the format of audit report that the chartered accountant issues, he is following his own audit report. Then every chartered accountant will give different formats of audit reports for different companies. If that happens, users cannot compare. Users will get confused what these chartered accountants are giving. So there will not be any uniformity. By following auditing standards, all the audit reports will be in a uniform manner. All the audits will be in a uniform manner. Understanding? So auditing standards will bring uniformity in the audit. And see, for the chartered accountants, they have to do audit. For doing the audit, how to do the audit, what audit procedures has to be performed, how to make the documentation, all this, how the chartered accountants will get to know? By reading the auditing standards, chartered accountants will get to know. So auditing standards will act as a skill development for chartered accountants also. Correct or not? So it will equip with professionals, it will equip the professionals with the skills that are required for doing the audit. Correct or not? And finally, it ensures the quality of the audit. So here this point is ensures quality of financial reporting. Last one is ensures quality of audit. Okay. Yes, sir. So that is the purpose of auditing standards. Next, coming to the final concept, which is engagement and quality control standards issued by ICAI. So ICAI has issued this engagement and quality control standards, right? This is very important. See, firstly, we have standards on auditing, right? Yes, sir. Now, when you will use these standards on auditing for doing audit of historical financial statements, right? So, if you wanted to do audit of, or we'll call it as, if you wanted to provide assurance on historical financial statements, you will apply standards on auditing, right? Yes, if you wanted to provide assurance on historical financial statements, we will apply auditing standards. This assurance also, which type of assurance? If you wanted to provide which type of assurance? Reasonable assurance. Correct or not? If you wanted to provide reasonable assurance on historical financial statements, auditor needs to apply standards on auditing, right? If auditor wants to provide limited assurance, if auditor wants to provide limited assurance on historical financial statements, then for providing limited assurance also, will you apply auditing standards? No. You will apply SRE series, nothing but standards on review engagement. So SRE series. So if auditor wants to provide reasonable assurance on historical financial statements, he has to comply with auditing standards. If auditor wants to provide limited assurance on the historical financial statements, he needs to comply with standards on a review engagement, SRE series. Clear? Yes. Now tell me, can the auditor be appointed to provide assurance on items other than financial statements? Yes, auditor can be appointed to provide assurance on items other than historical financial statements. Yes, examples. See, a company can appoint auditor to provide assurance on its internal controls. Auditor can accept that engagement and he can provide assurance on the internal controls. Yes, a company can also appoint the auditor to provide assurance on prospective financial statements. Prospective financial statements means financial statements related to future, that is projections. See, the difference between historical financial statements and prospective financial statements you need to understand. Prospective financial statements. Historical financial statements means what? As on 31st March, whatever the financial statements you prepare, in that financial statements, all that transactions are already occurred in the past, right? All the transactions that have occurred in the past in that 1 year, you are compiling them into financial statements. You will call it as historical financial statements. Now, in some situations, management will also prepare projected financial statements, projections related to future. So, that projections or financial statements related to future, you will call them as prospective financial statements. So, if auditor has been appointed auditor has been appointed to provide assurance on the prospective financial statements, will he apply auditing standards? No. He has to apply standards on assurance engagement, nothing but SAE series. So SAE series you will apply when auditor or the practitioner has been appointed to provide assurance on items other than historical financial statements. So if auditor has been appointed to provide assurance on items other than historical financial statements, examples, internal control, prospective financial statements, in such an engagement, practitioner should comply with standards on assurance engagement. Getting it? Here you need to observe one thing. If, see, in this first one you are providing assurance, in this third one also you are providing assurance, but if you provide assurance on historical financial statements, you will call that engagement as audit. There is a specific name for this type of engagement as audit. Here also you are providing assurance only, but there is a specific name as audit. But if you provide assurance on item other than historical financial statement, you will call it as assurance engagement. Okay, you should not call this as audit. Okay, you should call this type of engagement as assurance engagement. Understanding, sir? In case of first also on historical financial statements, we are providing assurance. Na, can't we call it as assurance engagement? No, because there is a specific name allotted for it as audit. So you have to call it as audit only, not assurance engagement. Understanding? If you are providing assurance on items other than historical financial statements, then you have to call it as assurance engagement, not audit. Clear? Yes, sir. So firstly we have seen auditing standards. Next we have seen standard on review engagement. Next we have seen standard on assurance engagement. Next, fourth one. Now, a CA firm, will it accept only the engagements in which it has to provide assurance, or will it also accept engagements in which there is no requirement to provide assurance? Of course, it will accept all types of engagements, like preparation of income tax return. In preparation of income tax return, is any assurance required? No, you will not give any assurance. Filing of GST returns, any assurance required? No. Preparation of financial statement, nothing but compilation engagement. Any assurance required? No. So the CA firm, it can accept the engagements in which there is no assurance is required. So if CA firm has accepted the engagements in which no assurance is required, while discharging the engagements, CA firm has to comply with standards on related services. You will call them as SRS series. Okay, so this SRS series is applicable for non-assurance engagements. Understanding? Who gave all these standards? Of course, our ICAI. Okay, all these series of standards given by ICAI. So CA firm can perform audit engagements, review engagements, assurance engagements, non-assurance engagements. Now, whatever the work CA firm performs, in all that work, it should maintain quality or not? Yes, sir. We have to do the work with utmost quality. Correct or not? So, to ensure quality in the work that an auditor or a CA firm performs, how quality should be ensured in all these works, guidance related to that is given in standards on quality control, that is SQC. Understanding? So this is the 5 series of standards that ICAI has issued. You can find the same 5 series of standards here. Okay, same explanation I have given, the same things you will find it here. So by this, the discussion of chapter number 1 gets completed. So is there any doubts with respect to this chapter number 1? I guess there are no doubts. Yeah. So next we will be meeting with the second chapter, revision of second chapter. The next schedule is 13th. On 13th we will be discussing the second chapter. Okay, so meantime, in this 1 or 2 days that you have, you completely revise this particular chapter. Okay, yes, sir. So I'll be meeting you in the next class. Until then, take care. Bye bye. See you.